Nifty FMCG has turned absolutely flat. The Realty pack is really taking it on the chin. It's down 1.5% right now. Sobha is trading with cuts of almost 5% right now. In fact, that is on the back of the operational updates that came in, and of course, the weak sales, that was dragged by the performance in Bengaluru and Gurugram for Sobha. On the back of that, Sobha is down 5.7% in trade. A couple of other names that are in focus today. Reliance is in focus. That's the big boy. That's really somewhat, helping the, Nifty, stay stable. That's, Reliance, that's trading with gains of 2% on the back of some positive brokerage notes coming in from Jefferies and Bernstein. But largely, the market breadth is tilted in the favor of declined Sneh.
Okay, so well, that is what it's looking like for the markets right now. But on that note, let's welcome the technical expert on our show right now. We have Nagaraj Shetti, technical and derivative research analyst at HDFC Securities, joining us. And from our in-house research team, we have Gaurav joining us as well. Let's talk about a stock then that's doing under pressure. Rather, it's not doing well at all in today's trade, and that's Paytm. Now, NPCI data suggests that no UPI share gain has been seen for Paytm in December. UBS has a neutral rating on Paytm with a target price of 1,000 rupees. Now, citing the NPCI data, brokerage firm UBS has said that Paytm has not gained any UPI share in the month of December, and this is after the company was given clearance to add more customers in October. From a 10% share at the start of the year, Paytm's share in the UPI market is nearly halved to 5.5% by the end of the year, and for the October-November period as well, Paytm's share stood at 5.5%. This indicates that Paytm has not seen any material monthly transacting users addition in December. UBS wrote in its note, Paytm's monthly transacting users fell also from nearly 100 million at the start of the previous year to 68 million by the end of September 2024. That's UBS's take on the NPCI data. You also have an MK note coming in on the back of the analyst meet that Paytm had held. They expect the company to regain earlier high of 100 million monthly transacting users latest by the next 12 to 18 months. They're witnessing positive results following the NPCI approval and new merchant onboarding, and the GMV growth likely to pick up in Q3. That's what MK is also flagging off. So that's the news flow as well as the brokerage take coming in on Paytm. That stock deeply under pressure.
All right, moving on from that to Nagaraj, coming to you. You have picked out Oil India for us. Tell us, what are you seeing on the chart for this one? Oil and gas counters have been in focus of late. If you look at the performance also, in the last 6 months, it has been in a corrective phase. Last 1 month, it has really started picking up. So from here on, what is the upside for this counter?
Hi, good afternoon, Ankita. Oil India has been in a downtrend over the last many months, and recently it has found an important bottom reversal somewhere around 440, 430 levels, and it has moved up. Overall chart pattern is indicating a positive bias for the stock price, and recently the stock price has moved above the important hurdle of a downsloping trend line. The overall chart pattern is looking positive. I'm expecting further upside from here onwards, and the 550 is going to be the next upside resistance to be watched in the near term.
All right, moving on then. TCS is an earnings candidate now, which is in focus today. We kickstart the earnings seasons from tomorrow, and the first candidate, of course, is TCS from the IT pack. It is trading with gains of 1% right before its earnings. Let's look at what it's of course in the back of the brokerages that have come in. But first, let's look at what to expect on a sequential basis. Q3, the revenues would see an uptick of 0.7% is what we are expecting. The revenue in constant currency term is likely to remain flat. We are expecting an EBIT of uptick a bit of 0.1%. The margins are likely to see an uptick of 34 basis points, and the PAT is likely to come up at 4.8% on a sequential basis. We are expecting furloughs and seasonality to impede the growth, but expect the moderation in the BSNL contribution. We also expect client-specific issues to normalize as far as the healthcare space is concerned. Now, let's look at what the brokerages had to say. Jefferies says that TCS is leading margin expansion due to low contribution from BSNL. TCS top report quarter-on-quarter decline, but they expect highest FX headwinds, which is between 80 to 100 basis points. So that's the note coming in from Jefferies. BofA expects healthy margin expansion, and Citi expects a revenue growth of 0.5%. So on the back of this positive brokerage notes coming in, TCS is up in a way 1%.
Okay, so that stock doing pretty well amid a sideways market. But let's move on then. And Nagaraj, you've picked out RailTel for us. Tell us what's the view on the charts coming in last 1 month, 6 months, very flattish returns coming in. So tell us what's the view going ahead.
Yeah, RailTel has been in a broader range bound action within a high-low range of around 428, 430 on the upper side and 400 odd levels on the lower side. Currently, after a sharp decline of recently, it is showing an important reversal pattern at the lower levels. The 200-day EMA has been regained in this trading sessions. Currently is trading slightly lower the EMA. I think overall chart pattern is looking positive. Even daily RSI is placed at the support of around 40 levels, and I'm expecting this stock to bounce back from the lower levels after formation of a higher bottom recently. And the next overhead resistance to be watched is 440.
All right, moving on. Gaurav, coming to you then. You've picked up Tata Tech for us. Now, of course, this one is also in the news on the back of that MOU that they have signed. Take us through the details of that.
Is in focus, and it is one of the stocks which are actually trading in green today, and the reason being that Tata Technologies and Telechip signed a strategic MOU to innovate solutions for next-gen software-defined vehicles. Now with this, they will be collaborating to focus on co-developing innovative solutions for advanced driver assistance system, which is also known as ADAS. Other than that, automotive cockpit domain controller and central and zonal gateway controller. This will help OEMs to address the software and hardware integration challenges, and it will also reduce the time to market hardware integration challenges as per for the OEMs. Now when we talk about management, they believe that this partnership will address the critical industry's need in the real-time updates, and it will also help the industry with the seamless connectivity, and it will enhance safety. By leveraging AI and advanced SoC technologies, this will actually enable OEMs to stay competitive in a rapidly evolving market. And when we talk about stock performance also, it is actually up in trade today, trading in green with the gains of around 1%. So definitely watching out on Tata Tech on the back of this positive news flow coming up in the market.
Okay, so that's the take on Tata Tech and why the stock is in focus today. But time now for an ET Now exclusive. Insurance companies have shared their views with the industry regulator IRDAI over possible changes in goods and service tax on policies. Insurers are in favor of a cap of 12% GST along with keeping benefits linked to input tax credit for health insurance premiums. Now remember, input tax credit is a levy offset mechanism that allows insurers to lower tax liability. My colleague Anurag Shah is joining with the details.
In December's GST Council meeting, decision on insurance premium was deferred, and Finance Minister Nirmala Sitharaman said IRDA will provide crucial input on this matter. So IRDA asked insurance industry to send their suggestion on the GST rates on insurance premium, particularly on health insurance and term insurance. And as per our sources, insurance industry has submit their suggestion to regulator IRDA, and insurance companies and insurance industry is in favor of passing off any reduction of GST to the policy holders after the adjustment of input tax credit. So insurers want reduction in GST rates on health insurance, term insurance, but they want input tax ITC benefit also be availed by the insurance company. Then therefore only insurance industry is against the exemption of GST on any segment, and they want especially in a health insurance premium, insurance industry is in favor of reduction of GST from 18% to 12%. So ITC benefit can also be availed, and if GST is exempted on any segment, then insurers will not be able to avail the ITC benefit. So suggestions on this issue has been forwarded from insurance industry to IRDA, and this again is likely to be taken up in a next GST Council meeting. Group of ministers has already suggested about exempting senior citizen premium and term insurance premium, but now GST Council to take a final call after IRDA's input.
All right, with that, it's time for us to slip into a short break, but you don't go anywhere. We'll be right back with all the stocks that are buzzing. Stay tuned.
If you like this video, then like, share and subscribe to ET Now.